The market is witnessing massive gain after massive gain. Cryptocurrencies and meme stocks are minting millionaires. Well, there's one play up 40,000% since it IPO'd. But after two major announcements in recent weeks, the question is, can the gravy train keep chugging along? Hi, I'm Matthew Carr, Chief Trend Strategist at the Auction Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Over the past year, tech stocks have been some of the biggest winners and losers. In 2020, tech was king. The NASDAQ led the charge higher as we went to all these new record highs. This year, it's been a lot more volatile, and we've had kind of a flame out. And the NASDAQ is actually lagging the S&P 500. But despite this, there have been some tech winners, particularly semiconductors, as we've talked here before, because of the shortage. And one of these, Nvidia, ticker symbol NVDA, just made a major announcement that I believe makes shares a lot more attractive. Now, real quick, Nvidia is a pioneering graphics card manufacturer. It's probably in your laptop and computer right now. In 2019, it was the 16th largest semiconductor company in terms of revenue. In 2020, it rose to being ranked number 10, and that's in part to acquisitions as well as to the rise of cryptocurrencies. Nvidia's graphic cards are crypto miner favorites. For instance, back in September when the company launched its new GeForce RTX 3080s, these immediately sold out by 6 a.m. on launch day. Then in February, Nvidia launched its own dedicated crypto mining processor, CMP, to help meet demand and take advantage of the market opportunity that it sees in this space. And here, this is already starting to pay off. Nvidia reported $155 million in CMP sales in the first quarter, which is really impressive since it only launched in February. But the uptick here is projected to be swift and ongoing. The company is forecasting second quarter CMP sales topping $400 million. So that's a more than 158% sequential increase. Now, keep in mind, that's still just a small piece of Nvidia's overall business. In the first quarter, revenue rose 84% year over year to $5.66 billion. Of that, gaming chip sales rose 106% to $2.76 billion. And data center sales were $2.05 billion, and that's thanks to cloud-based services as well as the ongoing rise of AI. Wally. These segments are performing quite well on their own, and there isn't expected to be a slowdown here anytime soon. Second quarter revenue is expected to top $6.3 billion. But we do have the sweetener with the robust, dedicated CMP business. Right? All of that is great. Though there's another announcement that's about to make shares a lot more attractive. Over the past year, Nvidia shares have been racing to new all-time highs. And shares of the semiconductor company are now up more than 40,000% from their IPO back in 1999. It's grown from a tiny $228 million company into a $402 billion giant. Unfortunately, that lofty share price of more than $645 is too rich for some investors. That includes Nvidia employees. Well, the graphics card maker intends to rectify that and announced a 4-for-1 stock split. This is the company's first stock split in 14 years. And it means for every share held, you'll be awarded an additional 3 shares. And if you want to wait, that split will reduce the price of Nvidia shares to under $200, and that's based on where they're trading right at this moment. Stock splits haven't been popular in recent years, but they are making a comeback now with how the markets have performed last year, especially this year, and high price stocks like Nvidia, Trade Desk, and a growing number use splits like this as kind of cosmetic surgery. With share prices over $600, many investors might balk and think, wow, that seems too expensive, or maybe they're overvalued. So companies split to bring that price down to seemingly more reasonable levels. Though the honest truth is the valuation metrics and intrinsic value, all of that remains unchanged. But here's the most important piece of the stock split strategy. Even though stock splits have no impact on that intrinsic value of shares, they deliver with outperformance. 2 separate studies by David Eichenberry on 1,000 companies that did 2-for-1, 3-for-1, and 4-for-1 split found these shares post-split outperformed the market by 8% in the year following the split and outperformed by 12% over the ensuing 3 years. That means stock splits are great for holding shares longer term. Now, I think Nvidia is a solid opportunity right now with its data center and gaming business, plus its booming CMP line that is really starting to pick up speed. But the split on the horizon is only going to bring in new investors and likely new all-time highs. So I think that makes it exceptionally attractive at the moment. Well, I'm Matthew Carr, Chief Trend Strategist at the Action Club. Thanks for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.